This entire video is going to be trading for beginners. So if you've been watching YouTube videos and getting resources here, getting resources there, I'm going to do my absolute best. I created a presentation for you and everything. It's going to be an interactive presentation as well. So you can actually click on links and resources. So it's basically a one-stop shop, a beginner trading presentation / course. So you can gather all the information, learn best practices, learn best platforms, best brokers, learn how to deposit your first time, everything. So as you can see right here, you can see that I do have a Canva presentation. So I tried to make it aesthetic as possible, but it's also going to contain some really important and relevant information. So let's get started. I'm gonna play this video right here. I think this is a really great video to explain what Forex is. So let's go ahead and play that really quick.
If you have ever traveled to a foreign country, you may have needed to exchange your money. If so, you have already participated in Forex trading. Forex is the short form of foreign exchange. Well, Forex is a bit more than that. For example, companies buy goods from other countries. In order to buy them, they need to obtain the local currency first, just like us when going on holiday. The difference is they will exchange huge amounts. When these companies exchange these huge amounts, they will actually move the price because the demand for the currency that they need increases. When the demand increases, the price increases. With all this exchanging going on around the world, the exchange rates constantly move. This is how it works. When currencies are exchanged, they have a certain price, the exchange rate. As in any market, the price of a currency is determined by the law of supply and demand. If there are many people or companies that want to change euros into dollars, the price of the dollar will rise against the euro, and so the exchange rate will change. Let's use an everyday example to explain how you can actually profit from this. Say you live in Europe and went on holiday to the United States. Let's say that you changed your 500 euros into US dollars at the rate of $1.4 for every euro. You got 700 US dollars, but you do not spend any money at all. So you still have $700 after you come back. After the exchange rate moved from 1.4 to 1.3, instead of getting just 500 euros back, you actually get 538.5 euros. You have gained 38.5 euros simply from holding your money in dollars while the exchange rate changed. This is essentially how we trade in the Forex market. We buy a certain amount of a currency, hold on to it whilst the exchange rate moves, then change it back, making money along the way. How to decide when the right time to buy and sell is exactly what we teach you throughout the rest of our learning lessons. As you can imagine, traveling a lot and saving a bit of money on your holiday budget and then exchanging it, it's not really a practical approach to trading currencies. Fortunately, there is an easier way to do this. You can trade currency through online exchange offices called brokers. What this means is that you can exchange currencies online throughout the day and take advantage of the constantly fluctuating exchange rates. Just as in the example of when you went on holiday, you can buy different currencies and make a profit as the exchange rates change. This is trading the Forex market. Trading Forex online with a broker has many benefits. You can trade Forex from your home or anywhere that you have an internet connection. The Forex market never sleeps. It is open 24 hours a day, 5 days a week, and so can suit your daily routine. You do not need a huge budget to get started. As little as $150 is enough to begin trading and building your account over time. Of course, it will require some learning until you get there, but this is exactly what Tradimo is here for.
That is basically an explainer of what foreign exchange is. Most people are trading Forex. Most people are trading the NAS 100, the US 30s, the golds. So yeah, we can get into that later on, but basically I wanted you to understand what Forex is. And yeah, so moving forward, I did have more of a kind of like a broken down layman terms version of what currency pairs and Forex is, but You can go ahead and read it if you'd like, but let's go ahead and get into some of the fundamental stuff. So trends, trends, really simple. This is a bullish trend. So you see higher highs and higher lows being formed. And then a bearish trend is basically lower lows and lower highs being formed, okay? So one thing that's really important is understanding market sessions. So there is the Australian, the Tokyo, London, and New York sessions. And so if you're in the USA, New York session is the most liquid, it has the most volume, and then also London sessions. So I live in California. You're looking around 12 a.m. is when London session starts. So anywhere from London session all the way up until New York, there's a good amount of volume. Anything after that, you know, liquidity and volume slows down. But right here, if you click on this, I'm actually gonna be able, you can actually see Forex market hours. So basically it's just gonna show you where you're at based off of your time zone, and then you're gonna be able to see what trading session you're in. So right here you can see that we are in a low trading volume area, and typically what that means is there's not a lot of activity happening. And then also with Forex brokers, the spread can be pretty wide. So you want to avoid big spreads when you're trading, and I can talk about that in the future. But this is a great resource to understand better times to trade. Okay, so let's go back to the presentation. Let's talk about spotting market trends. So this is a simple pattern that you're going to see a lot in on the charts. And so again, this is a bullish upward trend, higher highs, higher lows, higher highs, higher lows. So this line right here is essentially the support area, right? You're spotting a market trend, and based off of that, you can easily predict if price is going to continue doing the same thing over and over again. So that is an upward trend. Same thing for downward trend. So this is the actual movement right here. And then this long line right here is basically a line of resistance, right? So price comes up and hits the ceiling, and then boom, it continues to go down. There's also sideways movements. So you can see consolidation. Price may be looking sideways, but if it comes back to this support area, so right here, then you have a higher understanding of price ranging and bouncing off that specific area, which is called the support. So I kept saying support. You're going to see that this is what typically charts look like. And you're going to see that price comes down, hits this area of interest, and then starts coming back up. So the bottom end of things would be a support. Some people call it a floor. And the top is the exact opposite. So you have the resistance, aka the ceiling. A really good resource is this app. You can download it on Android and or iPhones. It's called the Candlestick Patterns JCP. I would highly recommend downloading that, but I did provide a few candlestick patterns, and basically candlesticks are just they're candlesticks on the chart. So if you go to Trade Locker, right? Oops. Let's go ahead and load this up really quick. Okay. So basically, so right here, you're gonna see all of these candles. So the last candle is current price, right? That's where current times are. I'm on the 4-hour time frame, so you're going to see that price is actually moving. So if I go to the 5-minute time frame, you'll probably see it moving around a little bit more, but price is right here. So that's a candle, basically meaning that green is bullish, red means price is going down. So going back to this, when you start seeing certain patterns on the charts, it's going to give you a certain indication. It's going to give you either a bullish sentiment or a bearish sentiment. And then we also have neutral sentiments as well. So once you start getting more advanced and you start recognizing these certain patterns, you're going to be able to identify whether you should get into a buy or a short. And the cool thing about trading Forex and just trading in general is you can actually make money when price goes down. So a lot of newbies, they think they have to buy low and sell high, but that's not the case. You can do the exact opposite and sell high and buy low. So yeah, we'll talk about that as well, but let's continue moving on and just breaking down some of the basics. So an indicator that I use, and I can break down my strategy, I'll provide that in this description below. But the EMA just means exponential moving average. I'll read it to you right here. It says the EMA is a line on your chart that shows the average price over a certain period, but it gives more weight to recent prices. This makes it react faster to market changes compared to a simple moving average, right? So SMA. Traders use EMAs to spot trends. If price is above EMA, the market is often trending up. And if price is below, right? So if these candles are below these lines, then the market is often trending down. RSI is another really good indicator to use. Basically what it means is if price is above 70, right? So right here, you're gonna see this area right here, and this is the 70. If price is around the 70, that means price is overbought. So that means price is highly likely to come back down because it's overbought. And then vice versa. If RSI is below 30, then price is underbought, and price can potentially go back up. So I do incorporate break and retest in my strategy a lot. So I'm giving you a simple breakdown of what that means. Basically, if price is consolidating, and this is the actual resistance, price breaks outside of that ceiling and then retest on that ceiling, making this ceiling a new support. So a break and retest happens when price breaks through a support or resistance level, then comes back to test that level before continuing in the same direction. So you see it right here, price flies through, retests, and then continuation. So really simple strategy, but it's effective. There's no need to reinvent the wheel if it works. Okay, another thing that I incorporate into my strategy is multi-time frame analysis. So, going back to TradingView, right, you're gonna see time frames. So I have the daily, you have the 4 hour, you have 1 hour, 15 minute, you can even go down to the 1 minute, right? And so let's go back to this presentation. And basically, if you're on the higher time frame, this is my analogy, right? Like we're looking at the state of San Diego, but you can't really see any good details, right? You can't really see what's actually happening. You just see land and ocean. But if you zoom in on the 1 hour, now you start to see more details. You start to see landmarks, you start to see parks, you start to see areas within the San Diego County. And then once you zoom in on the 15 minute, right, you can see a lot of detail. You can see, this is a four-way street. You can see buildings, you can see trees, and just a lot more detail. So higher time frames are basically for the big picture, what's actually happening with the overall market. And then once you start scaling in, you can kind of start seeing more details like the candlestick patterns and more to get a really crispy entry to get into a certain trade. So trading with confluence. Confluence just means stacking multiple confirmations, right? So example, if price is at a support level and it bounces off the EMA and there's a bullish candlestick, that means that is a confirmation, right? There's a lot of confirmations, meaning there's confluence. So if there's one weak confirmation, don't trade it. If there's two signals, maybe get into it, be cautious, but it's not a high probability setup. And then you have 3 or more confirmations, that is high confluence, meaning you have a lot more confidence to get into a specific trade. So, and I break that down in my strategy as well. Okay, so now let's get into risk management. Risk management is about protecting your account so you can stay in the game long term. Okay, so if you have a sizable account, you have a lot of capital, 1 to 2% per trade is the standard, right? And I know Forex, it's known for, you can get a lot of leverage. You can trade with only $500 and make, $1,500 on one trade. And so I'm not gonna say like, don't do whatever you wanna do, but all I'm saying is do your best to protect your capital, okay? Think in terms of risk reward. So, hey, I'm risking $100 to make $300. Don't just, throw out a random, position to pay off your bill, is what I'm saying. Okay, so let's talk about stop loss and take profit placements. So let's go to Trade Locker, and basically what a stop loss means is you're protecting your capital by telling the platform, I'm only willing to lose X amount of dollars if price comes down to this area. So if you see my mouse, you just hit the plus sign. Let me do it one more time for you. Plus, hit SL. And so what I'm doing is I am telling the platform that I don't think price is gonna come all the way down here because I wanna buy, right? So if price comes down here, that's when I get out of the trade, right? It's gonna take me out of the trade. So TP just means take profit. So I'm gonna assume price is gonna come up to this level because of history, right? So let's look at this risk reward setup. I'm gonna pull out my long position and we'll drag it up here. Price is currently right here. And then my stop loss is gonna be right here where I put it, right? So this risk reward ratio is 3.81. So if I'm risking $100, you multiply it by 3.81. So I have the ability to make $381 if I risk $100. But if price comes all the way down here, right, then I lose that $100. So let me show you. I'm gonna hit O on my keyboard on Trade Locker and make sure to always have this on, okay? And then go ahead and type in $100, okay? And so now you're gonna see that my risk reward is I have the ability to make $277. So this is low liquidity hours. So the spread is a little bit messed up, but you get the idea. I'm risking $100 to make 277 bucks. Not bad. Okay. Let's go ahead and get into the next slide. Let's talk about the common mistakes, right? So I wrote down a ton of stuff that beginner traders make mistakes on. So I'm not going to talk about all of them. I'm just going to highlight the top 5. Over leveraging, right? So using max leverage, you throw in a few $100s and then you're already trading, standard lot sizes, right? That is a for sure way to blow your account, especially if you've been trading for less than 2 years. And then, yeah, again, no risk management. So you're risking 10 to 20% per trade versus 1 to 2%. Revenge trading. So getting into a trade, losing a bunch of money, and then getting into another trade to make your money back, right? That is emotional and it's just not recommended. And then overtrading, right? I did this in the past. When you start getting excited about a new passion, right, you tend to overdo it, right? Let's say the gym, you get some shoes, you get a new Gymshark, whatever, some ASRB gear, some Young LA gear, and you're like super motivated, right? And you want to go to the gym, you want to work out, you want to create content, whatever. And then you get burnt out. So same thing with trading. If you start over trading and you just trade to trade, you're not in a productive profit and loss running your operation like a business. You're just trading to trade because you love the game, but it's a sure way to lose money because you're not looking for high risk reward setups. You're just looking to just play the game, if that makes sense. And then ignoring stop losses, right? Like, let's go back to the screen really quick. If you have your stop loss in place, okay? So let me draw this out really quick. So my stop loss is right down here. So once I set it, that means I've seen the market, I marked up my charts, and I know that price is here, and if it comes down here, I'm out of the trade. And a lot of the times, and I still do it sometimes, and I've been trading for 8 years, but why move your stop loss? Why move it? If you have it in place, that is what you need to stick. You need to stick to your trade, stick to your plan. So avoid doing that because it's gonna just hinder you long term. So let's go ahead and get into a live trade. I'm gonna go to the 15-minute time frame right here, and I'm gonna show you how to enter a trade on TradeLocker. So I'm gonna drag my TP to this area because price came up to this area a few times, okay? And we are seeing a good level right here. So price is consolidating. So this is a good area of interest, or AKA a support, right? So I'm gonna put my stop loss below that support because I don't think price will come down below it. And price has come up here multiple times. So now that I have my stop loss and my take profit in place, I'm gonna go ahead and hit O on my computer. I'm gonna always have this checked on, and I'm gonna risk $100. So not the best risk reward because the spread is high, but if I make it a little bit tighter, right, I'm risking $100 to make 117. So I'm gonna go ahead and hit buy, confirm it, and then now you can see that I'm in a buy position on Euro USD. So the fee, so it costs money to get into trades. It's called a broker fee. And there's also spreads as well. So I open a position, the size was 0.84, so a little bit less than the standard, and it costs $5 to get into this trade. So if I make that $100 or whatever, minus the fee, that is my net profit. If I lose $100, I'm not just losing $100, I'm losing $105.88 because of the fee. So this is why it's really, really important to trade during high volume hours, because if the spread is high, it's going to cost you a lot of money just to get into a trade, especially if you're, you know, trading big sizes with a small account. So you can see I'm already negative $43 because of that spread. So it cost me $43 basically, instant drawdown, and prices barely moved. Let's talk about reviewing and improving. There's tools out there, and I can recommend them, and I'll provide them in the link in the description below. But there are things to make your life better. There's another platform called TradeZella, and it's basically like analyzing all of your trades. So it's a trading journal, and you can basically see like what days are the best for you, what time frame is the best for you, you know, what trades you are making the most money on, right? So what instrument is making you the most money? Are you trading better on NASDAQ? Are you trading better on Dow Jones? Are you trading better on Forex pairs? And it just gives you a lot of data so you can actually get better, right? This is a sport, this is a business. So yeah, TradeZella is great for back testing. doing replays, writing notes, gives you great analytics. So I'll go ahead and provide that in the description below as well. But yeah, let's keep it moving. So let's talk about essential tools for day trading. You need Trade Locker, number one. So basically this platform that I was on, okay? And then you also need a broker, okay? Because that is where you deposit money. If you don't want to trade with money, you can trade on a demo account and play with like a simulation account. I wouldn't trade on a demo account too long because there is a different risk reward, right? Reward is real when you see real money moving. So the learning curve, in my opinion, is going to be a little bit slower if you trade on the demo account for 6 months. Like, trade on it to learn, make mistakes, and then once you understand the pure fundamentals of day trading and you understand and you have some confidence, just deposit a few $100 and start trading. That's the only way you're going to learn. Trade Locker, number one, is something that you need, and then you need to open up an account. So GatesFX, let me just show you. GatesFX is the broker I use. They are great. They have good leverage. You can open an account in less than 5 minutes. You just hit the blue button right here, and then boom, you're off to the races. So here is my dashboard. All you need to do from there is hit live account, and then you just hit Trade Locker. Once you hit that and continue, it's gonna make you do your KYC, so basically your verification. You upload an ID, and then they're gonna send you your credentials via email. So they're gonna email you your login and password, and now you can deposit money. So how you do that? Really simple. You just go to funds, you deposit funds, and then you're gonna have a wallet, right? So what you want to do is hit crypto, hit continue, and then you tell the broker how much you want to deposit. So I'm just going to do an example, $100, right? And then I deposit via Bitcoin. So I'm going to go to BTC, and then I'm going to hit continue. So once I hit continue one more time, it's going to take you to a deposit screen, okay? So let's wait for it. Okay, great. So you see this little scanner? So by the way, I use Cash App over Coinbase because the fees are actually a lot more affordable. So if you're not familiar with Cash App is basically a simple banking app where you can send money, you can buy crypto and send crypto. So as you can tell, I have $485 right here, okay? And then what you need to do is go ahead and click on your Bitcoin wallet, right? And then right here in the upper right hand corner, so go ahead and hit that. And then once you throw this on the computer, it's gonna automatically prompt you to put in that dollar amount, right? So that is how you deposit money into a broker. You do have to have Bitcoin in a certain wallet. So if you've never bought Bitcoin before, basically all you need to do is just hit buy right here. So you hit buy, it's gonna ask you how much Bitcoin you wanna buy, and then you're off to the races. And then what's gonna happen is it's gonna confirm on the blockchain, and then you'll have that money in your wallet. Once you have it in your wallet, all you need to do is transfer funds. It should show up in your wallet right here. IB wallet just means like you're an affiliate and you're referring people. So look for wallet that just says wallet. So I'm gonna go ahead and transfer this 29 bucks, and I'm gonna transfer it into my raw ECN account, right? So let's go ahead and do it. Continue. I'm gonna deposit the entire amount, transfer the entire amount. $29.79. Go ahead and hit continue, and then boom, it should immediately go into my live account. So let's go back to my Trade Locker. I'm gonna switch over to my live account. So switch to live. And boom, I have $29.79 in this account now, okay? Let's go back to the presentation. And I want to set the expectation, right? Like most Forex traders prefer unregulated brokers, and here's the main reason. You get higher leverage. They can offer the leverage that's much bigger than regulated brokers, lower barrier to entry, so easy account approval, and lower minimum deposits. That's why most people are trading on unregulated brokers. It's not because of the leverage. Most people don't want to deposit $10,000 starting out right away. The bonuses is, you can get deposit bonuses, you can get little promotions and stuff, because the unregulated brokers have to do word of mouth promotions, right? They can't really advertise anything online because they're not regulated. So is it safe? Absolutely. Is it better than regulated? I wouldn't say that. I would just say that it is a different operating system and it's a lower barrier to entry. So if you only want to deposit $100, then go with unregulated. So choosing the right broker. Basically, GatesFX is my trusted broker that I use, so I'll provide the link in this presentation. But if you want to do your own research, you can just go to Trustpilot, and then you're going to be able to see live reviews. It's an unbiased. It's kind of like Yelp for businesses, right? Online businesses. So here is Gates 4.7. You can see liquid, aka sway markets, right? So a lot of people use it, but not necessarily the best. Reviews, you have Hero FX, so they also have 4.7. Henko Trade is another popular platform, and then KOT Forex, right? So this was just a quick overview of basically some of the most popular brokers out there today. And I've been using GatesFX. They are lovely. Deposits, lightning quick. My withdrawals, lightning quick. Customer service is great. They communicate, like it's not a bot, it's not AI, it's a real person getting back to you. So just wanted to leave that out there for you guys, because I know brokers is like really important. But I also want to debunk myths about unregulated brokers, right? So people hear a lot of things about Forex, and it's just kind of like the underdog, right? Like, people are like, oh, Forex is a scam, like Forex traders aren't real. No, it's real. I mean, that's how you spend euros. If you're from the United States, you have to convert your money into euros if you want to spend money in Europe, right? So it's a skill-based market. Real growth comes from consistency, discipline, proper risk management, like I said, and you're not going to make money overnight. This isn't gambling. So myth number 2, high leverage equals higher profits. In some ways, there is truth to that, but you can also lose the same amount of money that you make if you're using that sort of leverage. So if you want to make $500 on a $500 account, you can absolutely double your account in one trade. But the downside is you can also lose your entire account in one trade as well. Another myth, you need a big account to start. We kind of went over that. The other myth, Forex is gambling. Again, it's really about how much you're risking on that trade. And then the other myth is if you trade more, you're gonna make more. This is something that's more of a psychological thing. It's like, running or doing homework or, understanding the markets more and more and more, which means, okay, if I study more and trade more, I'm gonna get better. But that's not the case with trading. You have to let the markets come to you. And so that is another myth that I wanted to just kind of go over with you guys. And then signal screws, right? A lot of people who get into trading, they see a lot of influencers and gurus and big traders that have big names. They offer signals, and it's kind of like a shortcut. It's like, hey, like this guy knows what he's doing. Let me go ahead and take signals from him so I can start making money. But every account is different. Everyone's using different risk. And that's why it is such a speculative and like subjective thing, right? Everyone's trade is going to be different, right? The reward is going to be different. The loss is going to be different for every single trader that is taking that signal. So if the signal provider has 100 grand in their account and they're only risking 1% of their account, but you only have $200 in your account and you're risking half of your account, right? And you lose that trade, who's going to be more pissed off, right? It's not going to be the guy that has 100 grand because he's using proper risk management. So a lot of people like love signals, and then there's also a lot of people who hate signals, and then they end up blaming the signal provider. So just be cautious of signals. That's all I got. Hopefully this gives you a little bit more clarity. I showed you how to open up an account. I use Gates, like I said. Use Cash App to deposit your first deposit, and then study the candles, study time frames, understand a strategy. So I'll provide the strategy video in this description as well. I'm not a guru, I'm not any of that. I'm just here to provide value. So if this was kind of like long and boring and long-winded, I apologize, but I'm also going to send over this presentation where you can click on the resources. So you can click on GatesFX, you can click on the candlestick pattern, you can click on that time zone link that I shared with you guys. And again, open up a demo account if you've never traded before, or start trading, learn a strategy, and then get into the game, get your hands dirty, start trading with real money, throw in $300, $500, $1,000, and you're gonna lose money. It's guaranteed you're gonna lose money. That's a part of the game. But hopefully this helped. I wanted to be a little bit more thorough about how traders can get started as a beginner. I feel like a lot of people kind of go straight into strategy and stuff, but people don't even know how to deposit their first amount of money into their account. So that's all I got. Peace.